Good morning, traders. It is 8 a.m. Chicago time on the 16th of June, 2022. It is Thursday today. A lot going on already. This is episode number 2255. I want to remind you, first and foremost, to subscribe and turn on the notifications in the YouTube channel if you're there. If you're not, go to your YouTube, log in, and subscribe and add notifications. This way you can get notifications as soon as something's posted. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. There's a lot to cover today. So let's just dive right in. This is the Convergent Trading pre-market summary sheet. Again, reminder that tomorrow's triple witching and expiration, and this expiration carries a huge, and I say huge, number of expiring options out of the money, currently carrying about 2.1 trillion in morning expirations, thanks to Convergence member Resgear. $3.4 trillion of options expire tomorrow morning, including 1.9 trillion of SPX index options. Pretty gigantic number, as I said, quite huge. And so, you know, this expiration has been very special. The other piece is, look at that middle box where it says ES overnight status in front of you in the pre-market summary sheet, and look down at the range, 138.25 points. I did a quick write-up on this in the Convergent Trading Head Trader channel. For those of you who are members, might want to check it out. I said that this is the highest range we have seen since November 9th of 2020, in which case this was a rally in the overnight session after the election, and is the max range we've had. Today's range, 138.25 in the overnight session, is the maximum range we've had in the last year, in the last 252 sessions. Very unusual behavior, and we have to expect that this session is likely to show high volatility going forward. High volatility going forward. The time before that we saw these overnight lows, I posted this image here. I'll share with you because I'm a nice guy. Here it is. This is the overnight session. This is 5 p.m. Chicago time to 8:30 Chicago time. The overnight session over the last few years, and you can see the middle pane here says range. There's a dashed, this dashed line right here shows what it was in the last year. And you can see that tonight's range of 138.25 is the highest we've seen in the last 252 days. You can see it's measured as the max. We expect anything up to 50 points to be normal, and this is way, way, way above normal. And we'd have to go way back in time to find something that matches this. As I said, election, the night after the election, November 9th, 2020. Wherever we see these spikes in range in the overnight session, it generally marks a low. So you can see there's a low there. There's a low there. This one here did not mark a low. That's one that hasn't marked a low. But in general, we have these rotation lows when we have these really wide ranges. Back here is a swing low right here, and so on. So I wanted you to just observe this. This is where we are right now. Just wanted you to observe it. It doesn't mean we should be getting long, because the overnight session has a risk-off posture. Very, very much risk off, and it doesn't mean we should. This is a long only indicator, but it's just interesting to note that this is the highest overnight range. So that's one thing I wanted to bring up. The Bank of England raises rates as expected by 25 basis points. However, the Swiss National Bank came out and surprised everyone with a 50 basis point increase yesterday following the FOMC rate hike of 75 basis points, which the FOMC has done the Fed's done a great job kind of getting everyone ready for that through the media by, putting it out there from Sunday afternoon through Wednesday in the news that this is very likely to be a 75 basis point. My expectation yesterday, and I'm a nobody when it comes to this macro stuff, my expectation is they were gearing everybody up for a 75 basis point hike, and then they would put out 50 basis points, causing the market to rally quite strong. But with that, the latest that I've read is that yesterday's rally, and we could see the rally, and we'll go over that in a minute. We talked about it pre-market that it's very likely to rally to at least 38.08 from where it was with a base at 37.40 yesterday. Based on the conference notes and based on how things were playing out, there was an expectation that inflation has got to be peaking, and we come in today and that idea just completely fizzled out. And so the market sold off right from the open. I mean, it's a big hangover for the market. You could see how much we've sold off. These are big numbers here. This is strong risk off, 2% or better. The Dow's holding up best, 533 points. I remember the day when 500 points would be all over the headlines. The S&P's opening right on the edge of yesterday's low. We are just below yesterday's low. It's interesting that we're down here. The Nasdaq's, of course, taking it hardest on the chin. And then, of course, the Euro stocks and the German DAX, which are responding to the BoE and SNB decisions. So that's where we stand this morning. Housing starts came out, and it was weaker, 1.549 million units versus 1.69 expected. Building permits came in weaker as well, 1.695 million versus 1.79 million. So we see a reaction in the housing market. Initial claims came in better at 229,000 versus 240,000 expected. And then this evening we get the Bank of Japan interest rate decision. So that covers pretty much everything. The ES has about 400,000 contracts traded so far. This is quite heavy. The inventory is about 58% short. B-shaped profile, which is generally regarded as a long liquidation profile with a range of 138 points like I was just discussing. So there's just a lot to take in there. Let's take a look at yesterday. Yesterday I talked about this this basing pattern, the fact that we have this 3740 point of control, and we have settlement at that price, and in the overnight session tested it by 4 ticks and held above and started to break higher. My expectation is this is likely to turn up and go to the magnet, this purple line, very faint purple line there at 38.08. I talked about the 08 as a key target for yesterday, and what this means is it's likely to end the one-time framing down that we have had, which says that lower highs, and continuing lower highs from before, from way up here, lower highs tell us that the trend is lower. We don't care about higher lows or lower lows. You know, price action people like to describe it as lower high, lower low. That makes a trend, right? But in auction markets, lower low, in auction markets, we don't really care about the low. We just want to make sure that the high is a lower high in order to take that as a trend down. And yesterday was expected to end it. I think if I forward the video a little bit, you'll see right here, I draw this sweeping turn, and the expectation is we are likely to go into neutral. So the way one-time framing works in general is that you have one-time framing on different time frames. So you can have it on the 30-minute, you can have it on the hourly, you can have it on the daily, you can have it on the weekly or monthly. And generally, one-time framing continues in a direction as the market, reprices risk and goes to discover buyers. And then when that one-time frame is broken, the market goes into a neutral stance, which means that it's expected to go into balance. Generally, markets don't go from one-time framing down to one-time framing up, meaning they're putting in higher low. They go from putting in lower highs to putting in higher lows. It generally goes, the lower highs, so one-time framing down, it breaks them like it did yesterday, and then it generally goes into balance, and then balance then brings in the opposite players, and then they battle it out, and we either break to continue to the downside and one-time framing continues to the downside, or we have a reversal and we start one-time framing up and recovering, okay? And that's what was expected yesterday. We expected to push higher, consolidate here, and then start to squeeze back towards the next MC point of control or balance area above. So that's what was expected. Here's what actually happened. Let's take a look at our Edge Pro X here. So the magnet remains at 3808. This is a key area. You can see that we have a new box here. This box describes Monday, Tuesday, Wednesday. The box boundaries are in that 3830 all the way down to 3713, 3714, which is if you see it, it's a faint green line. Let's adjust that a little bit. Let's bring it up a little bit. We filled in part of the gap, a portion of the gap that we had on Monday. We filled that in a little bit yesterday. We didn't quite get to the gap mid. We have key support below us, which we pushed up against in the overnight session so far. And we have our magnet above, and then we have settlement at 37.93. And then don't forget, we've got this 37.40 area. So that's where the full session VWAP is. Currently, we have this 37.40 area, and we are below it. So the overall structure is quite weak. We have migrated from this big balance, broke through on Thursday, walked forward on Friday. This is Friday. Then Monday, we started to get, we're walking down still. And then Wednesday, we had a reversal. And this is expected to be, we're expecting to build balance here. I know the range is quite large here, and I know it's selling off, and I know the structure is B-shaped like this, meaning it moved away from higher prices quickly and is accepting lower prices, and therefore you get a profile that looks like a B shape. This is what a B-shaped profile is. This is long liquidation. These are longs that are getting squished. And then the opposite of it is a P-shaped profile where the market opens down here, sees that this is an unfair price, and then squeezes shorts until it finds balance and then starts forming a profile up top. That is a short covering rally and a short covering profile shape. Quick crash course in profiling. So we're in this B-shaped profile, but if I zoom in here, you'll see that actually there are a couple lines in the sand this morning that we need to pay attention to. There's a line right here at 37.33. I'll draw it. These are areas you want to observe. We just tested this area right here. Okay, so this is 33. You're going to have to watch for this. This is an LIS right now. It's a line in the sand. The second line in the sand is where we are right now. Right here. You can see where we're testing. That box was a little bit bigger than I wanted, but you have this low, this high. They're kind of running into each other. This low, these multiple highs here. And this area here is the 13. This is a secondary or a more immediate LIS. So the question becomes, given that the point of control is down here at 25, the yellow line is the point of control. So the point of control currently, let's see, 37.20. Point of control is at 37.20 right here, 37.20. The full session VWAP separation, a big separation and pretty big separation with the inventory being short on very high volume. This is a morning where we have to sit and wait and see whether or not we get the 33 or we really, unfortunately, we're opening right at the 13 and it's fighting it. Do we give up the 13 and move into this lower distribution? If we do, we're likely to take out the overnight low. The overnight low currently at 36.95, so we're breaching the 3,700 into 36.95. However, my expectation is it's likely to push into our key support here, down here, 37.09, something like that. I'm expecting it to push down here, and I'm expecting it to be responsive. And I'm expecting it to test this 33, break the 33, use it as support, and start squeezing back above the 37.40, which is the multi-session accepted price. The multi-session, the MC point of control in this area, volume point of control in this area, which is the 40, which is right where the full session VWAP is, and I'm expecting it to fight its way back to 37.50, and I'm expecting it to run into resistance right into this 37.77 area right in here from yesterday. So carry this over. You can see we had a little bounce there this morning. This is what I'm looking for. I'm looking for this thing to come back into the box, into balance. I'm not expecting it to push through. I know there are some big ranges and so on in the overnight session. Highly unusual situation. We still do have, the roll is done. The open interest is done in the roll. Expiration is not. We still have delta hedgers, net delta hedgers using futures to offset their options exposure and all that stuff, all that good stuff. Sure. But the action here is incredibly compounded. The risk is incredibly compounded given the moves by the ECB, the Fed, Bank of England, the Swiss National Bank, and then tonight the Bank of Japan, which is expected to hold at 0.1% or negative 0.1%. We'll see what they do. So there's a lot of risk in play here that the market has, I believe, has already priced in. Again, I'm not a macro trader, but I'm really looking for this to come back to the 77, the area I'm expecting the market to come back to, the 77 to the 83 area. Expecting it to come right back here. Okay, that's the key. If it does not, and I'm not going to draw my scenarios on here, I'll be full of crap if I put up scenarios today. I just don't know. If it does not respond, which is my expectation, if it does not respond, if it pushes higher and into like the 30, 33 area and fails, or to VWAP and fails and turns over, this thing is likely to run a fair amount. We already have extraordinary range for the day. And so, we're already below one volatility sigma down for the close. This is already stretched. So if it's not able to get back into this 33 area, maybe the 40, then if it sells off, I'm expecting it to be a really choppy sell-off. I'm not expecting it to be a fluid run. This is extended. I'm not expecting it to be a fluid run, hit the bid and breakout trades. Not expected. Can happen, but not expected. It's pushing up. It has a lot of metrics, statistical metrics stretched at this point. This is why I keep going back to the range of the day so far. as a metric. I'm also going back to the fact that we are against key support here at 37.13. It could not sustain a move below 3,700. It came back into 3,700 and held steady. And then you have these clear lines in the sand that it's fighting right in here. So I'm expecting it to battle its way back above 37.33, and I'm expecting it to take back 37.40, the MC point of control, and then eventually end up somewhere up here. Okay. I know that's a lot to throw at you. There are a lot of pieces that go into this in terms of auction theory, statistical analysis, and all that stuff. We know we ended the one-time framing down yesterday, and here we are again. So we may take out the low again and resume the one-time framing down. But for today, it has done a lot. It has moved quite a ways. And I anticipate the buyers will be interested to come in and bargain shop this morning. So we'll see what happens. This is one of those type of days where we know that things are a little bit stretched. We know we have high range, which means that the range is likely to be high in today's session. We expect volatility to rise. That compounded with triple witching tomorrow is a high risk area. So you want to cut your size, expand your stops, expand your targets, or do the smart thing and don't trade. If you're not consistent or you're trading a scared amount of money or small account or scared account, it really isn't worth it to try to test your luck in this kind of action. If you want to do that, go do it on a simulator and save yourself some money. This is a capitulation point in my opinion, and it's really tough to read the order flow and the action, the price action in this kind of environment. Okay, I'm just being honest with you. I own a brokerage, EdgeClear, so I'd love for you to trade. I'd love for you to come to EdgeClear and trade like hell, because that's how a brokerage makes money. But I'm really looking out for your best interest to say, if you're really unclear and you're not geared, your plan, if you have one, is not geared for this, it really is best to sit it out. Okay, I know that's not what you want to hear, but it's the truth. Good luck today, and I'll catch you tomorrow morning. Take care.